products. So, Primerica has the best term insurance on the market. There is no company that offers better term insurance as far as the features and benefits go. So, obviously, the first thing you get with our coverage is the death benefit. So, if somebody dies, you get the death benefit that you select. Another big feature that we have is what's called a terminal illness benefit. And what that is that at any point, if either of you become terminally ill, you can withdraw 40% of the death benefit while you're still living. So that's a huge deal because most experimental treatments for cancer, which are highly effective, aren't covered by health insurance, and also they're very expensive. We had a client that went for an experimental treatment in Arizona. It was $18,000 a month for that treatment, and she went for 11 months and was cured because she was able to pull the terminal illness benefit from her policy. So that's a big deal to be able to pull that benefit. Another big benefit we have is what's called the increasing benefit rider. What that is over a 10-year period, it allows your coverage to increase by 10% for the first 10 years. And at the end of those 10 years, what happens is your coverage will have doubled. So basically, if you guys had $440,000, at 10 years from now, you would have $880,000, and it gives it to you at the discounted age that you were when you opened the policy. So it's just a cheaper, discounted way to add coverage if you want over time. You can stop that at any time. You don't have to allow it to increase, but it's just an added benefit that we give to our clients. Another big thing we have is what's called guaranteed insurability, which means once you're a client with us, let's say you did a 20-year term. During those 20 years, let's say, God forbid, you became terminally ill and you have cancer, and then the 20-year period is over. Now, because of that, most companies will not allow you to renew your insurance because that contract's over, and now you're uninsurable because you have a terminal illness. With us, you're guaranteed to get a policy issued at the same rating at the end of those 20 years with no medical questions or no medical or physical having to be done. And that's a big deal because a lot of companies will not allow you to do that. A lot of companies too that allow you to renew your coverage at the end of term also require you to renew it into expensive whole life or cash value insurance. So that's another big deal because obviously you don't want to have to renew into whole life or cash value insurance. Another big thing that we have is what's called a child rider. And with the child rider, you can, for about $6 a month, you can insure all of your kids for about $10,000. You can go the whole way up to $50,000 if you want. And it covers every single kid. It's for one price. Doesn't matter if you have one kid or 100 kids, it's the same price. And the kids are covered until age 25 on the policy. And at age 25, they're guaranteed to be able to get their own policy for 5 times the face amount of the child rider. So that's great if you have a kid that becomes diabetic or has some kind of health issue that wouldn't allow them to get life insurance. They would be able to get a policy at that point. Trying to think if I'm forgetting anything else. Did I miss anything? I feel like I'm missing something.
Disability.
Yeah, and I don't have that on here. That's an option they can add on if they want. And usually when I go through I usually go over that in the end when I'm actually doing their life app. I offer it to them and show it to them in the life app.
Did you do the war and terrorism?
Yeah, thank you. That's just popped in my head. So also the other big features we have, there's no war, airplane, or terrorist exclusion. So a lot of companies did not pay death claims from 9/11. We paid all of our death claims within 14 days. It was over $10 million worth of policies. Another thing too is a lot of companies will not cover you if you're killed in an airplane crash. We cover all of that. So one thing great about Primerica's insurance, there is no hidden secrets in the policy. If you die, they pay the death claim. There's no questions asked about it. A lot of companies will require you to pay extra for what's called an airplane rider, and that will allow you to be covered, but you have to pay extra for it. So I explain all those features and benefits before I even show them the price. And then from there, what I would say, because this is a little pricey, but it doesn't matter. Some people don't care about the price; they just want to get the coverage. And I sell so many policies that are in the range of $75 to $120 or whatever. It's great when you get a bigger policy too because it pays you more, but you want to make sure it's something they're comfortable with as well. So what I look at that, I would say, hey, Bob and Linda, and usually I would know this prior to getting to this point. I can look at their income, and I've done this enough times, and I know that the monthly price, whether that's going to be an appropriate monthly price for them to be able to afford based off their income. But
plus,
if Linda's, what's that?
Plus, you're also going to know how much they're currently paying.
Right.
And if you're going to be, if they're paying
Exactly.
a lot for a whole life policy, it's going to be cheaper anyways.
Exactly. For example, me and Mike sat down with a family that was spending almost $700 a month for life insurance, and we gave them a policy for $371 a month. So $371 a month is a lot of money, but we're saving them a boatload of money on what they currently were saving.
And we doubled all their coverages, over doubled.
And we over doubled their coverage too. So, but based off of Linda making $8,000 and Bob making $12,000 a month, $211 should not be an issue financially for them. But let's say that they only made, let's say they both made $2,000 a month, then $211 might be an issue for them. So what I would say there is, hey Bob and Linda, I want to show you, what the price looks like with us. Just because this is what it recommends you should have doesn't necessarily mean that's what you should get. It's something that you need to be comfortable with on a monthly basis. It's something that fits good into your budget with your family. So I flip it around, I show them, and I'll break it down and say, this is for $440,000 each of you. So Bob's, yours would be $125.01 per month, and Linda, yours would be $80.26 a month. With a child rider coverage on there, you're looking at about $211.45. So you're looking at that price there. Does that seem too high, too low, or just about right for you guys? What do you guys think?
Too high.
Too high? Okay, great, no problem. So one thing to keep in mind too is having some kind of coverage is better than having nothing at all. God forbid if something would happen to either one of you, you could at least pay off some of the debt and have some kind of income for replacement. What would be like something comfortable that would fit into your budget? Do you think on a monthly basis, price wise?
Half that price.
Half that price? So maybe about that'd be a little hard to do. Let me see here. Let's look at see what $250 a month is. So here we go. So looking at $250,000 on each of you with the child rider, we're getting you pretty close to that half price range, $125.88 a month. So it still gives you pretty adequate coverage there. You can at least pay off your house and some other things and invest the difference. Based off on that price, is that something that looks better price range wise for you?
Sure.
Okay, great. So let me explain how this process works. So this is something you're comfortable with. What we'll do is we can go ahead and submit an application. And what an application is, it's not a contract. It's just to see if we can get you qualified. And what will happen is we submit the application, and what will happen, they'll deduct the first month's premium from your bank account to start that process. So it would deduct the $125.88. And what's great about that is as soon as we submit that application, you get what's called conditional coverage, which means, God forbid you drive to work tonight or tomorrow and you're hit and killed in a car accident or something happens, Primerica will pay the death claim even though you don't have a policy in hand. So that's a really big deal to have that conditional coverage. Then from there, it'll start about a 4 to 6 week process where they'll send a medical person out to your home. No expense to you. We cover the expenses on that. It's at your convenience. They'll come out and do a medical. And after the medical's done, about 8 weeks from now, the policy will go ahead and get issued. And that $125 that was deducted at the time of application will go cover your first month's premium. So you'll get about 2 to 3 months worth of coverage for about 1 month's price. And then at that point, you still have 3 options. You can say, hey, once the policy gets issued, you say, hey, I'm really comfortable with the coverage and the price. I really like it. I want to keep it as is. The other option would be maybe I want to see something a little cheaper per month. Maybe I want to lower the coverage a little bit, or maybe look at a shorter term. Or the third option, hopefully you wouldn't want to do this, but worst case scenario, you could say I'm just not comfortable with it, and you don't have to accept the policy, and they send you your $125 back to you like nothing ever happened. So really there's absolutely no risk in starting the application, see if we can get you conditionally covered. With all that being said, you see a reason why you wouldn't want to go ahead and submit the application?
Nope.
Okay, great. All I need is your driver's licenses, and you can pull out your checkbook a while. And would you mind getting me a glass of water?
I don't have a driver's license. I have a green card.
You have a green card? Okay, well that's fine. I'll get your information off that. So basically,
just out of curiosity, can I see the difference when you click on waiver of premium? Just want to know.
Yeah, well, it depends on age and how much coverage they have. So theirs would probably go up a good amount because of age. So 125 to 188, so that's pretty big. Now, I did a waiver of premium on a girl the other day, single person, 150,000 for 35 years. It was $2 a month for her to add the waiver of premium. And by the way, the waiver of premium is an additional rider you pay a little more money for. If you ever become disabled, Primerica pays the policy for you. And then also, if you ever become terminally ill, you can pull 70% of the death benefit while you're still living, not 40%. So that's a big deal.
Is that still a max of $250,000?
What do you mean?
With the 70%.
Yeah, that's a good question. I'll have to find that one out. That's a good question. I believe no matter what it is, the maximum you can pull is $250,000.
And what are the price breaks again? It's 150, 250, and 400.
Yeah, thanks for bringing that up. So there's price break points with the coverage where they can get the best discount possible. We have a price break point at 150,000, 250,000, and 500,000. That's combined coverage. So That's where, like, if you have, somebody that's, let's say they have, it's recommended 450,000, or let's say it's recommended 250,000 and 200,000. It's probably better to put them both in at 250. Like me and Shane looked at that last night. They were looking at additional coverage, and the wife was looking at 250 and the husband was at 200. I said, well, let's just look at what 250 and 250 is. For like another $2 a month, he got an additional 50 grand. So it makes sense to make sure you're hitting those price break points to give them the most amount of coverage for the cheapest amount of money. Really, that's. Did you get rolling?
Yeah.
Oh, go ahead, buddy. You're good to go. You're good to go. I'll reach out to you, then we'll figure out when would be a good time to get together this week.
Okay.
So thanks for coming, man.